You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related, coming to you, as always, from the options capital of the known universe, lovely Chicago, Illinois, here in the old Options Insider Studios. And of course, while you're listening to this show, we have a lot of other great content you could sink your teeth into over on the website, probably the best place to start, theoptionsinsider.com. We got a bunch of written content over there if you're into the old words, and if you're into the old reading, and if you want to just have it spoon-fed, I should say, into your brain, then by all means, just download the radio network, and you're off to the races. You can get it, of course, on our site and the Insider Radio Network tab, as well as most of our radio partners, as well as, of course, all the online portals, iTunes, TuneIn, Stitcher, et cetera, et cetera. You guys know the song and dance, and if that's too much for you, you don't want to really do much, really lift a finger, just have it really, truly spoon-fed into your brain, and just grab our mobile app, and it's pretty much all there. Just let it update for you, and let the goodness come to you. No shortage of ways for you guys to enjoy our programming, downloading, and streaming. While you're doing that, send us a question, send us a comment. We love to hear from you guys. And joining me on the old program today, starting off, let's go in order of proximity today, starting off out there in the hinterlands of Chicago, a beautiful suburb known far and wide for its tropical and indeed temperate climate, beautiful St. Charles, Illinois, where we are joined by one Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program, sir.
Always happy to be here, especially on a Monday.
So that implies not Thursday.
Well, sometimes Thursday too.
I can understand that, though. Monday is the extra special Uncle Mike episode where you get to inform and educate on an extended basis. You probably look forward to that.
I do, and the fact that you always say that that's your favorite section of the show really makes me happy, even though I've heard rumors that on other sections you say that about other sections too, but that's just the rumor, though. That's just what my minions are telling me.
I do spread a lot of jealousy amongst the different segments because they're all individually my favorites, so I can't choose one, even though I often do choose perhaps the mail block, because it's just when the listeners get to join us, and I love that part as well. So, of course, and speaking of joining us, we are also joined from the true hinterlands of the planet, a.k.a. Maine, where we are joined by the Rock Lobster himself, taking a break from gazing over his beautiful ocean view there in his little palatial estate to join us here while he snacks on some delicious lobster. He is the Rock Lobster himself, Mr. Andrew Giovinazzi. Used to know him from his daily appearances on the network on the old Options Oddities program. We're working on retooling that and getting that back to you in some interesting format pretty soon. But now you have to settle for him once in a while on the old Odd Block program and once in a while on Ball Views, as well as his moonlighting gig over there at the old pit. Mr. Rock Lobster, welcome back to the program. To you as well.
I am thrilled and pleased as punch to be here, back to pretty much my favorite radio network. I'm just going to go right out and say it is my favorite radio network. Yeah.
I would hope so. I would hope we would at least be up there somewhere in the rankings. There's a few others out there, maybe a sports network you like or something, or some talk radio because you're a diehard fire breather, whatever floats your boat. I hope we would at least be in the conversation somewhere.
Yes, for sure. I think I don't know about sports radio network. I don't have time for sports. I've got too many kids playing sports.
That's true. That's true. They do tend to consume a lot of time, those young ones. They have that habit. And speaking of time, it's time for us to get rolling right on into our first segment. It's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we break down what was moving, what was shaking, what was rocking, what was rolling in today's activity. And you could say was a bit one-sided for the most part. A lot of red on the old screen today. We are recording Monday, September 28th. For all of you playing along at home. Yeah, and it was, I think you can call it technically a bloodbath, a massacre, or whatever you want to call it out there on the broad indices. Just an aggressive sell-off pretty much across the board. Most of the major indices just taking it right on the chin. S&P's leading the charge down nearly 2.5% net on the day, hovering right around 1885. So there goes all those nice little rallies we had recently, all shed and then some. Today in one fell swoop. Of course, the Dow not looking much better either, off 300 handles, 16,000 even, roughly 16,001. Maintained that one handle there. The NASDAQ off nearly 150 handle, 142. Just across the board, slaughter, of course, except for the old VIX cash, which popped up, but perhaps not as much as you might expect, given the fact that it's already floating in some rarefied territory. Hitting today at 27.34 right now as we're recording, so up about 3 3/4 handles or so on the day. Not a good day for gold, of course, taking it on the chin, off about 14 handles. Crude off about a handle and a half or handle and a quarter or so out there, hovering south of the 45 handle out there in the big WTI product. So yeah, it depends. Pretty much, you had to look pretty far afield to get a little bit of pop anywhere. It was just red across the board. A lot of this driven, of course, by our old friend / market killer China, who seems like every week or so there's a new headline out of China that proceeds to just annihilate the market. And this week it was the profits coming out of the industrial companies over there in China falling 8.8%, which is, of course, not a good thing for all of the large cap companies that rely on those sales. Of course, not a good thing for the raw materials producers and the raw material products, oil, gold, etc., because a lot of the demand comes from that part of the world. So this is just the latest in a series of body blows coming out of China. But today's seems to be a pretty good one. They may have us down for a little standing 8 count on this one. Mr. Rock Lobster, we'll start with you here. A lot to chew on, a lot to see, hope you like your steak rare, because it was bloody out there today, sir.
Bloody, yeah. It was a discussion all day. We're sitting in the pit. We're like, okay, all right, is this going to be it? Is this going to be it? And then nobody really kind of bought into any bouncing theory today.
No, there was none of that. No one wanted to catch any knives. They're all out of catching.
I have to say, we looked. I was even looking at buying straddles into the close just to see if there'd be continuation. I just couldn't bring myself to do I could not bring myself to do the full pop, looking for another massacre type day. Although I don't expect tomorrow to be that great. I think this is, and I'm starting to get the feeling of the post-QE era is finally upon us, where, you have bad news in China about profits and industrial production, and the stocks go down. The market's not going to go up because the Fed is going to pump more money into the economy. So I guess they've reset all the algos now when they say, when you hear bad news, sell, instead of buy. And I think that's kind of what we got. And where we go, where we end up with, I have no idea. But as Mr. Tusaw says, can't get bullish until the market starts to kind of hold a bid. So I think that's sort of where I am. And I think the only thing that was kind of surprising was I think the VIX October future was only up like $1.40 on the close. I have to check. Let's see where it is after hours. It just, what we call it is an underwhelming response from the volatility futures. They definitely went up. They're supposed to. VIX itself closed near the highs of the day, the cash part, so there's still a lot of demand for the options. Yeah, and the October closed right around $24. So you had a pretty large response from all the cash movement, but the future movement was a little bit. November only up $1, 22.71. So, I mean, the only thing that's saying, well, maybe we're not going to totally crash tomorrow is the fact that we didn't really catch a hard bid in the futures, the volatility futures, because the vol future traders are usually pretty smart. Yeah, like, okay, this is bad. It's all short-term algo stuff, blah, 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 blah.
Yeah, I think that's safe to call that underwhelming one handle in the front month future. I think a lot of the people who've been loading up on VIX out there of late would certainly qualify that as underwhelming. But that's kind of what you get. That's kind of the nature of the beast these days when you got a sell off now in a market that's already kind of primed for as we've been through a few sell offs now over the past month. The futures are already backward, not perhaps as steep as they were, but that could be changing if this continues. But they were already backward, so you kind of already got a nice bid in there. The options are already kind of bid up to the upside. You got some juice running in those veins now. They're already inflated from a premium perspective. So yeah, you kind of in a bit of a catch-22 there, where there isn't a lot of room to run to the upside because you're kind of already there. And so so that hence the only one handle. We've seen people loading up all week on more upside again out there in VIX options. I think they would definitely term today's action for them as underwhelming. And I'm looking here because while you're talking, I was looking earlier today too, trying to see if some areas where the bulls may have been able to get their horns in and maybe turn this thing a little bit. Because you didn't see a lot of that today. It seems like towards the end of the day, the last couple of hours, like that 1880 level in the SPOOs seemed to be kind of where some support kept kicking in because it kept bouncing off that. It bounced off it a couple of times throughout the day and got up to almost 1890 again, then back down to 1880. And it did that kind of vacillation towards the end of the day in that range. So it seems like, and of course we closed, north of that. So perhaps for those, short-term technical chartists out there, maybe that's where the support is. I'm leery to call anything support in these markets these days when you can give up nearly 50 handles in the blink of an eye. But that said, that perhaps that is the one thing the bulls can sink their teeth into. That it showed a little bit of support there, but yeah, it's that's tenuous at best. Uncle Mike, as the resident bull of among us here today, what caught your eye today, and what's your take for what we saw in today's action? A bit of a rare and bloody mess out in the street today.
Yes, it was. There's blood in the streets. The town of Chicago, as my good friend Jim Morrison said, who wouldn't know who I am and is dead anyway. Anyway, with that being said, I think that the thing that caught my eye the most today, even though I'm not much of a sector watcher, was biotech. So with biotech, it's down about 20% over the course of approximately the last 3 weeks, if you look at IBB. And in looking at that, it kind of makes you wonder, maybe the market is thinking that Hillary Clinton's going to get elected and really put the kibosh on all biotech profits and not allow any profits anywhere ever. Who knows with that? But that's one thing that really caught my eye, and one thing with which, if I were going to do something right now, I know the big talk around the news today in a lot of areas was, would you rather buy biotech at this point if you're a value person or a buy the dip type of person, or would you rather buy energy? Now, obviously, energy has come down quite a bit, but that's a little bit more pronounced. Biotech is something to where, in looking at a 20% drop over the course of a week, is something. It's a very impressive move on it. The other thing that caught my eye today, if you're looking at a lot of the indices, technology is something that, if you look at the NASDAQ, I believe was the worst hit of all the major indices. Apple made an announcement today, and I'm not following Apple like I once was, but they made some announcement today. They hit some record in sales. I forget what it was, honestly, but they did that, and they're still down almost 2% on the day. So that's another bearish sign. The other thing, just to kind of talk, being the resident technician here, meaning since I'm a technician, since I look at a chart maybe once every 2 weeks, that makes me the technician. And I guess I'm also the veterinarian since I had a pet bird when I was a kid. I don't know. But the other thing with which I'm seeing on here for the S&P is that if you look at where we actually fell to on the flash crash day, or the mini flash crash day back in August, you could make a case that it was very close to where the lows were back in October of 2014. So with that, you could make a case that perhaps what's happening if we test that low again, which on SPY would be 182.40, and we're at 181.92 is what it was back in October of 2014. But if we go to those lows again, we'll be down over 10% on the S&P for the year. We're already down over 10% from the all-time highs a few months ago. So in terms of support, there's really, even if you are a technician, you're going to really have to stretch to find something with what you're looking for. I'm still a bull for the long term. I always have been, always will be, of course. But I am very cautious right now. I would say that I have maybe 15 to 20% of my deltas on the table with which I would normally have at this point. And I'll go through exactly what I'm doing on Mark Longo's favorite segment of the show, the strategy block.
Yeah, that's why I called it a tenuous support at best, because I wouldn't put a lot of stake in that 1880 level out there. I was looking to give those bulls out there any reason to hope, and it seemed like a little bit of life on that level. So perhaps, who knows? Maybe that's where the big bounce will come from. But yeah, I'm not putting too much stake in that. That said, you mentioned the commodities, Uncle Mike. I know you've been watching energy of late, but you also have been. Your other big holding for a long time has an interest, of course, in addition to even back in the Apple days, was, of course, our old shiny friend GLD, taking it on the chin. Like I said again today, has gold giveth, gold taketh away. It's back in the taking away part of that equation right now. What's your take on the shiny stuff right now? Are you still as much of a gold bug as you were? Are you doubling down? What's up in GLD these days?
Yeah, I've been just kind of playing it. I've been selling some calls on it. I just got out of a covered call that I sold recently on it with GLD, and it did. For gold, it took it on the chin today, down a little over 1%. But in looking at over the course of the year, GLD closed 2014 at 113.58. Today it closed at 108.42. Not a ton of movement from start to finish if you were to go on the year of it, but it's had some very exciting intervals in between, so to speak. So it's kind of like one of those things to where we talk about on the show how if you look at the open of the stock market and the close of the stock market on a given day, might not be much change, but throughout the day, there's a lot of movement. And that's kind of been the story with gold thus far this year. I'm still a bull on it for the time being. I think the strong dollar with which we have is something somewhat of a hindrance for gold for obvious reasons. But at some point, when it's going to happen, I don't know. But at some point, if the dollar does weaken again and our government decides to weaken our currency again, which they have in the past, I think gold would be a tremendous buy. So I'm kind of looking at it right now to where I want to be in it, but I want to be very well hedged while I am in it for the time being, because it can represent some volatility. But for the time being, overall this year, if you've just been buying and holding gold from start to finish, it really hasn't come down that much. Now, full disclosure, we hedge such a thing, but even if you were just a gold buy and hold person, buy and hold gold. Well, that's a new rhyme I'll have to come up with for my next marketing thing. But anyway, if that is what you were to do, it's come down a little bit, but nothing of any major significance on the year this year.
Yeah, you're right. Net to net, depending on the time frame you're looking at, obviously hasn't been the big wipeout. But of course, from a vol perspective, it's been off the charts. I said it before on the show. I'll say it again. If you haven't had a chance, listeners, go check out our second most recent episode of Long and Short of Futures Options, where I sat down with one of the new guys over there at CME doing some of his economist work. And usually we joke about economists here on the show, but he had some of the best timed research I've seen of anyone, certainly this year, coming in. And the title of his paper was, of course, the gold storm on the horizon ? And it came out mid-July. which if you know the time frame for gold, about the week after it came out, I think it was less than a week, he was talking about implied vol being very low out in gold, and that could signal perhaps a lot of movement. Certainly a good buying opportunity from a vol perspective. And within a week, I think the implied vol went from, I think, somewhere around about a 12 to about 17, 18, 19, and it's kind of been rocking and rolling out there ever since. So if you've been buying vol out there, it's been a great scoop. And if you're a gold bug, you owe it to yourself to listen to that show. He lays out a lot of cool, interesting structural issues with gold and how low it can get to the downside before you start hitting into some of the costs inherent there and a lot of other issues in addition to all the options volatility stuff we like to talk about here on the show. So check that one out if you're a gold bug like Uncle Mike Tuso. One more thing I wanted to hit on, Mr. Rock Lobster. You'll think this is funny too. We had pulled this up to talk about on the show, kind of in our usual, and this is more of a mocking way. You guys know, listeners, if you've been to our site at all, the Options Insider, we're kind of an options clearinghouse. We do a lot of content from all over the place, and we feature a lot of different stuff, a lot of different contributors. We also feature what's going on the Bloomberg column every day for options. And this week, so today's column certainly fell into I think they were probably just scraping for some content. So what do they throw out, which is kind of the low-hanging fruit in the options world? Here's what the straddle is pricing in the S&P for the week, and let's talk about that. And so I kind of highlighted that to talk about on the show more in a mocking way, because it seems like that's kind of the lowest of low-hanging options fruit. This straddle is priced in at 2.4%. We're pricing in a 2.4% move for the week for the S&P, and they brought in a few people to pontificate that, including Buzz Gregory over there at Goldman and others of VIX 2% infamy, 2-point infamy. If you listen to Vol Views, you know what I'm talking about there. But lo and behold, Mr. Rock Lobster, right as I was about dead set to start mocking this article just for, low-hanging fruitness, what happens today? The market sells off 2.4%. So now I look like the silly one and indeed the fool. This reminds me of the guy like on the craps table who's playing the yo all day, or the high, the hard 12, and all of a sudden he starts hitting it 4 times in a row. Looks like a genius. This kind of reminds me of that. So yeah, interesting stuff. Did you catch this one, Mr. Rock Lobster?
I did not catch that because I did not. But it's funny because last week on Thursday we were pricing all the straddles as, to be honest, being too cheap. So that's why again we looked at them again today, trying to find some way to do it in a reduced cost way. But I just something's going on and I don't quite get what it is. And usually, that means we're going lower. So we'll see how that all shakes out.
Yeah, I just thought it was funny. The exact move that they were talking about materialized today to about 2.4%.
Magically.
Yes, magically. Magic how that happens. So, yeah, interesting stuff. So I have to withdraw my mockery. It turned out to be very well-timed piece indeed. And, of course, as Uncle Mike was touching on earlier, it wasn't exactly boom times for the Apple zealots either. The number I believe you were referring to, Uncle Mike, was, solid, very solid. iPhone numbers, 13 million new iPhones, beating expectations in the first weekend, one of their key metrics, beating expectations and sales numbers from last year. Of course, stock off, not just because the market's selling off, but also because a lot of the analysts coming in and saying, yeah, not so much. You're kind of padding the numbers there a little bit, because last year it only included about 10 regions. This year they added that number to include 12 regions, including, guess what, China. And even when China is giving up the ghost over there, they still can buy a few iPhones. So it tends to boost the numbers a little bit, hence the added selling pressure over there in Apple land, off nearly 16% from the high earlier this year, again, outpacing the S&P, which is down, at least this morning when we put this together, about 11%. Those numbers could be a little bit exacerbated now, but nonetheless, interesting stuff out there as well. And of course, going back to the gold land really quickly, we were touching on it earlier, Uncle Mike, and it seems like all the people who got perhaps lulled in with Miss Yellen and everyone else last week thinking it was bull times for gold kind of got bit in the old rear end this week. Looking at the numbers come out the CFTC going into the big decision by Miss Yellen on the 17th, we saw people really increasing net long, net bullish positions out there in gold, both the futures and the options. Of course, CFTC puts out that commitment of traders report where they break down all that stuff. And so it seems like people were buying what she was selling, and they were loading up on gold. And who knows, perhaps some of today's sell-off is people giving up that ghost and saying, you know what, ain't going to happen anytime soon for us here in Goldland. Either way, not a good time, at least today, to be a bull out there in good old Goldland. And of course, from an options perspective, my favorite overused indicator out there, out in the old GLD, is the put to call lowest since about 2012, which is a decent time frame, not like 2 months or 6 months. It's lowest since 2012. So be that as it may, some people like to actually put some weight in that. If they see it as contrarian or not, I'm not a huge fan of that unless you're talking, VIX getting really crazy to the call heavy side. But other than that, still, for those of you who follow that, put call out there in GLD, pretty light. So bear that in mind as we will continue rolling with the show here, right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program where we break down what's moving, what's shaking, what's lighting up the old tape today from an options perspective, perhaps a weird and wild options perspective where we try to uncover some of those juicy nuggets for you. And surprise, surprise, looks like a lot of bears out in force in the old options market today. Who'd have thunk it? Going to kick things off in a name that's no stranger to bears over the last few years. People have been proclaiming the death knell of this name for quite some time, still managed to cling along. This is Best Buy, of course, ticker symbol BBY. Closing today about 35.5 down, about a buck even, which is about nearly 3%, 2.7% on the day. So not a good day from an underlying perspective. Outperforming the S&P to the downside, never a good sign. And surprise, surprise, we saw some bearish love, some bears getting their claws out here in BlackBerry, and some near term playing in the truly bloody frothy waters of the weeklies, as we saw the OCK weeklies going out on the 30th. This was the put spread, 35.5, 31.5, so right at the money right now. Put spread going up just a hair under 5,000 times. Looks like paper buying for $1.06, going up 2 blocks over there on our old friend, the ARCA. Again, a very aggressive play on this one. He needs it, obviously, to keep rolling down lower south of the 34.5 range or so for this sucker, or at least get close for it, start hedging some gamma and scalping it, hopefully, if there is some bouncing around here. But either way, interesting stuff. And yet again, Mr. Rock Lobster, the bears got their claws out for Best Buy. This time, though, it's pretty close to home, just a few days out, and playing pretty close to the fire. So what's your take here? Kicking it off with some aggressive bearish love here for I almost said BlackBerry, for Best Buy. The other B name that the bears love. This is, of course, so we're not talking about BlackBerry today, we're talking Best Buy.
Yeah, this little Best Buy, it looks like just a kind of a bearish put spread. The stock was trading as high as 39, just trading 30, had good earnings. Actually, we bought our stove at Best Buy. The service was awesome. I hope that means that they're not going to go out of business because their service is so good and they can't make any money. But was our most pleasant appliance buying experience. However, this person bought a Sizola put spread and is either they own some stock or they're trying to protect some stock. They're up a little bit of money on the put spread today, but this is the first day, by the way, I profiled 3 bearish trades that I thought were actually, worthy of just all straight bearishness.
Worthy of all straight bearishness. I like that. But you're right. The Bulls have been beating this one up a lot over the past. Let me pull up a chart here. For the past year, it's actually, I know it had a little bit of a revitalization story out there as well, and I was going to point that out as well. They have, of late, made some interesting moves out there in Best Buy, trying to make more specialized kiosks and kind of having almost stores within a store. We have like a little Apple store, a little GoPro, whatever the case may be, trying to focus on some higher ticket, higher end items, boost those sales per square foot. They realize people come into the showroom and then they buy it online anyway, so they're going to try to lure them in with some more tactics on that. And it seems to be working. Of course, BlackBerry kind of in the middle of that recent, last year range, kind of about as high as about a little over 40, got about as down to about a little under 30. So it's kind of been vacillating in that 40-30 range right now, almost dead set in the middle of that. And our friend here putting some money where his mouth is, that we are heading lower, and we're heading lower before the end of this week. So, listeners, if you're on that same train, maybe you want to load up on some downside primo out there in good old BBY. Meanwhile, we're going to keep on rolling right on into our next name. We are talking here about getting away from the Bs, because they can be kind of confusing. So many Bs, so many bears, so little time. Moving out to the Ks. This time, the Spider KBW Regional Banking ETF, ticker symbol CRE, K-R-E. Closing today about 40.63, down about 55 cents, a little over 1%. On the day, it's the name that's rocking about 6,000 contracts and change a day. Doing a fair sight more than that, including about 10,000 in this one trade that we started highlighting this morning on the old mothership, theoptionsinsider.com. And keeping with our bearish love, our bearish trend here, this guy didn't even mess with the put spread. He said, the hell with that. I'm going straight out, getting me some puts to the tune of the OC 40 puts. Again, these are about these are at the money as well. Excuse me. So yeah, these are pretty close to the fire as well for a whopping 63 cents, doing it 10,000 times in one block on the Philly open interest, only about just 800 some odd contracts there. So clearly opening paper straight up, looks like a straight up buy as it appears on the surface. No stock, nothing else to indicate any sort of any other positioning going on here. It's just a straight up bear loving himself some OC 40 puts. Mr. Rock Lobster, take us away to the land of bearish trades here in KRE.
Isn't that just a straight up bearish thing you've ever seen?
Yeah,
I'm just going to buy a bunch of OC 40 puts.
There's no nuance there whatsoever. It's I want them now, I want them coming in, give me to them, I give them to me, I want them, I'm lift the offer, and I'm getting them.
That's all I can say is I'm thinking there might be some stock. Maybe it's a protective play. There's no open interest. I think just somebody kind of just saying, screw it, I want them. So, they're up a few cents now. I thought the banks would hold up a little better than most of the other stocks because, they are going to start diddling with rates a little bit. Well, theoretically anyway. So that should be better for, better for the banks. But, unless somebody has some stock against this is just straight up waiting for everything just to fall apart over the next, week or so.
And even if they got stock, the outlook ain't good. they're not scrambling to load up on calls and get more.
Yeah, they're looking for bad. That's what they're looking for. Let's just call it what it is.
Yeah, they don't get more straight up bearish than this one, listeners. Yeah, serious bearishness. And then we're going to flip the script a little bit. No more straight up buys, at least from a puts perspective, but still have some synthetic put action out here in a name we haven't talked about in a little while, but is a perennial favorite here on the old odd block. This is good old Micron, ticker symbol MU, one of the stalwarts of the .com explosion, has kind of vacillated ever since. And today they closed about $14 and some change off nearly $1, nearly 6% on the day. So not a good day for Micron lovers out there. It's the name that's been averaging some serious paper. I'm looking at some of these numbers, and they're pretty aggressive, to the tune of over 100,000 contracts a day here in Micron. So lighten it up lately out here in Micron land, and doing some decent paper again today. What caught our eye out here wasn't so much a expiring this week put buy, a little bit farther from home this time. Got to go all the way out to Jan of 2016, where we look at the 16 calls. That's what caught our eye this time. In particular, these 16 calls going up. Looks like paper selling 7,281 times for $1.14. And looking at the open interest, there is a ton, nearly 50,000 contracts open on this strike. So a lot of people playing out here in the Jan 2016 16s. This particular trade went up in one block over there on the SIBO marked price variation. If you listen to the show, you know that usually indicates some stock is lurking somewhere nearby. Got a few other blocks going up. Total on the day, in addition to this kind we saw here for $1.14, that brought the activity up to nearly 20,000 contracts just on this one strike here. Again, looks like an aggressive trade. We didn't see any stock. Doesn't mean that like the earlier trade doesn't mean they don't have any. But at least we didn't see any blocks going up so far today, even though it went up price variation again. Those tags, not perhaps the most reliable thing in the world. Interesting stuff out here in Micron, looking at another 1 year chart of Micron. And if you've been trading or following Micron, you know the past year hasn't exactly been a banner one for good old MU. No, not Monsters University, but good old MU here. And hitting a high last year, or about the past year or so, nearly 37 back in December of last year. And it's kind of been a long, painful struggle to the downside ever since, with a big hit coming back in June, where they gapped down about looks like about 6 handles or so coming out of earnings there. So yeah, it hasn't been a good recent run. Now trading 14, so they've been cut more than in half. Our friend here perhaps deciding he doesn't mind taking a little premium off the table here, but also giving himself a little bit of room to run on the upside in case good old Micron decides it needs to bounce a little bit. And looking at this chart, I couldn't particularly argue if he needs a few handles to the upside, because it could be good for that. Mr. Rock Lobster closes out here on the old odd block with our friend diving back in for some size here in Micron.
You know, this is one of those stocks that perplexes me. I guess because nobody buys PCs anymore, or not, but this company may be getting, and I know they're trying to get their sales in, but it's just a cheap company. So I thought this was kind of a buy right type trade, like a yield search, and just could. And I'm most likely guessing these are closing. Opening kind of a buy right type trade, because the price variation tag. There's a lot of open interest. It might have been it's possible that it could be closing. Somebody unwinding the position. I just didn't see a bunch of stock go up. So maybe somebody wanted to keep the underlying position. But this feels kind of like a buy right. Volatility is really high. The company's pretty much trading near a 1 year low within $1 of it or something. And just looks like somebody's back on the Micron, kind of like a value play. It's a 5 PE company. They got lots of cash. So again, I'm not the ultimate fundamentalist, but it does look like a pretty cheap technology play, and I think the buy riders just selling that, and they're kind of saying, okay, I'll get in on the year lows. I'm happy with that, and off I go.
Yeah, I'm with you on the whole Micron kind of being a bit of a head scratcher. They made sense when they were rocking and rolling in the .com boom, because everyone was using their products. These days, a lot of the things they make, certainly in the desktop equation, are not as much in demand. On the mobile side, you can argue that they are, but things like they make, like the RAM, some of their products, certainly very very commoditized. You're very subject to the whims of the market there, and some of the other things like NAND flash and others. Yeah, you're right. It's a bit of an interesting beast, perhaps why the market has seen fit to cut it by over 50% over the past year. Not a lot of clear use case for them going forward in terms of high margin areas that they can expand into or grow in. Still, perhaps our friend here has the right of it. We shall see. He's got some time. He's got all the way till Jan, unlike our other two friends there who are going to be done really quickly, and we'll see how well those worked out. Speaking of things working out, it's time for us to keep on rolling and see how Uncle Mike works out in the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, this is the portion of the show we turn our gaze away from the weird and somewhat shady side of the options market, aka the odd block, and away from the bloodbath that is the trading block today, and instead turn our attention to the more tranquil and indeed serene pastoral setting of the strategy block, where Uncle Mike steps on down, stone tablets and bubble pipe in hand, to dispense some very pleasant, very soothing, very calming options, wit, and or wisdom. Uncle Mike, it's been a crazy one out there. What do you have to soothe our tattered nerves today, sir?
Ladies and gentlemen, there's plenty of reason to panic. Get out now or get in. I don't know. Get in, get out. Just panic. That is my advice right now.
Did I give you the wrong lead in, sir?
No. All right. Thank you for having me on yet another edition of Mark Longo's favorite segment of the show, the Strategy Block.
I guess if you keep saying it, it has to come to pass, right?
That's my goal is. That's my goal. I just want to keep saying that. But anyway, a couple things I want to talk about today. First thing is I want to outline a little bit about who I am and my strategy. It's going to come as no great shock to anyone who's listened to this show at least one time in the past that I am an eternal bull. But along with being an eternal bull, I believe that you need to be very cautious in being a bull because a harsh, painful fact of life is that markets don't always go up, unfortunately. So with that being said, when we're negative on the year, which we are right now in the S&P, the S&P is down. Our SPY opened the year at 205.54. Today it closed the day at 188.01. And so when we're in a market like that, I have to, by my trading rules, become very cautious. And so instead of, and I'm referring to my SPY call strategy, and in my SPY call strategy right now, I have no calls because I am being cautious. So on that note, we're in a down market at this stage, and I want to kind of recap the actions with which I took last week in the market with which we had. Last week, SPY opened up the week. Let me bring up my chart here. Opened up the week last week at 196.44. And on Tuesday, we had quite the gap down. We opened the day on Tuesday at 193.88. So at that point in time, I actually sold a put spread on the dip because I'm not buying calls right now. I'm just basically waiting for dips and trying to sell put spreads just to keep some bullish deltas on the table. Not trying to keep a lot of them, but just trying to make a little bit of money in a somewhat crazy market. So Tuesday's gone, to quote my good friend Ronnie Van Zant, who's also dead and has no idea who I am. And then we're on Wednesday, market comes down a little bit, and then Thursday is here. And the market comes down, and I actually had to roll down my put spread. And I talked about that on Thursday's strategy block last week. Now, with that being said, of course, Friday was kind enough to me to come up higher. And on Friday, I had the opportunity to get out of the new put spread with which I was in. I rolled down and out I was in last week's 190, 185, and then I rolled to this week's 187, 182 put spread. Market came up and it got to a point where I was able to get out of that put spread for a net profit of 7 pennies on the week on Friday. And I took it. And the reason is because of the fact that after a roll, when we're having a market like this, after I have to roll down, if we have that much choppiness and I'm able to get out for a profit, as tiny and as minuscule as that may be, I want to take it. Second reason with which I got out is because of the fact that we have been having a very gappy market recently. If you look at today's move, I hate to call it an anomaly, but of a lot of the big moves with which we've been having in the last few weeks, they've been coming from overnight gaps. And I've talked about this on the show quite a bit, actually. So because of the gaps with which we've been having, I did not want to be in anything in my SPY call strategy going into the weekend. Sure enough, the weekend comes and we gap down again today. Now, a relatively small gap, comparatively speaking. I believe the gap came actually, it was approximately the close of SPY on Friday was 192.85, and we opened today at 191.78. So about a 10-point gap down in the S&P. Relatively small gap, comparatively speaking. Markets came down to 190.5 on SPY. And I decided to sell another put spread at the 185, 180 level for this week expiration on SPY. Now we'll see where this goes throughout the week, but the thing with which I want to emphasize is this is probably maybe, I would say 15 to 20% of a position. And so that way, if we do have an apocalyptic gap down tonight and we're all of a sudden at 162 tomorrow on SPY, then yeah, I blew it, but I blew it with a much smaller amount of money. It's impossible to prepare for anything like that, but the way with which I'm trying to manage risk as best as I can is to actually have a smaller position on a put spread when doing so. Now, with that being said, the last thing that I want to go over is how I'm managing the risk on it going into this week. If we get to a point to where I took in a 52-cent credit on this spread, if we get to the point to where I'm around $1 in terms of the debit to get out of it, I will roll down. Now, how I'll roll down, I have no idea at this point. I just have to take what the market gives me at this point in time. Typically, if it goes against me right away, then I would probably roll from, say, this week's 185 to maybe this week's 183 or something like that, and usually get it to where it's less than a 50-cent cost to roll down. If it's there right now, I honestly have no idea. So for those of you home gamers out there and you're saying, he's not going to get that, I might not, because I don't know at this stage. It's after market right now, and I don't know what the market's going to do tomorrow, so I could only speculate as to what prices would be. So I'm not going to bother researching until I know what the prices actually are. But that's likely the first step of what I would look to do if it happens this early. Now, if we can get a couple of days to where maybe this doesn't go against me until maybe Wednesday or Thursday, then I can roll down and out into next week most likely for maybe a 5 to 10 cent debit or possibly even a credit, depending on what the prices are. That's what I would look to do if it goes against me later in the week. Now, should the market go higher? Now, there's kind of an interesting thought from a person selling an actual credit spread. The market actually might go my way. Holy cow, that's an interesting theory. Should that happen, my plan is to get out when I can get out for a debit of approximately 10 cents. To where at that point, I will have gotten around 80% of my profit. And trying to hang around for that last dime is a difficult thing to hang around for, and I would advise people not to do it. If you can ever help it. So that's what's going on in the Mike Tusaw world of strategy. And I will give it back to the man, the myth, the legend, Mark Longo.
On a day like today, 7 cents on a put spread to the downside. Nothing to sneer at, sir.
Was very happy to get it on Friday.
I think you were. Yeah, not pigs get fed, hogs get slaughtered, and you know Uncle Mike, he's no hog. He may be piggish at times when he finds something he likes. He likes rolling those puts. He can be piggish in that, but he's no hog, certainly, listeners, and he refuses to be slaughtered even in markets like these. So if you're looking for someone to babysit your puts just like Uncle Mike's doing there, then by all means, drop him a line. See what he can do for you. And now, because we are running up against it, we will keep on rolling right on into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, you guys know the drill by now. This is the portion of the show where we tell you what we're watching, what we're keeping an eye on for the week to come. And the week has certainly become a lot more interesting from this perspective. We were talking about Micron earlier in the show, and of course, we're going to talk a lot about earnings here on this segment, but it seems like China has a way of, kind of like Miss Yellen, sticking their finger in the air and saying, hey, don't forget about us. We're still over here, and we'll sucker punch you if you're not paying attention. So China clearly on the radar going forward this week to see if any other shoes will drop, to see if the SPOOs can indeed hold that 1880 level, or if that's just a paper-thin support as they continue crashing to the downside. All indications today showing that things are looking a little ugly out there. So that'll certainly probably overwhelm most things on the micro earnings front. That said, we are starting to come around to some interesting stuff. We're on kind of just on the horizon for the big quarter to kick off yet again. Hasn't really come in yet. I got a few names amongst whom we're talking about. Just our friend earlier, Micron. They are indeed reporting on Thursday, of course, all that paper we were talking about in good old MU out there in the Jan cycle. So our friend there, not playing any earnings-related pop. He's just deciding to put it on this week, I guess, for his own personal reasons. Also got Costco coming in this week. I don't think either of those two going to be too much really market moving and shaking. So, yeah, all eyes are indeed back from the Fed, back over to China perhaps where they belong. That said, Uncle Mike, what is drawing your attention and or consternation this week?
Well, you're right. There's a lot of there's not necessarily a specific news announcement per se. I mean, you could even make a case for non-farm, perhaps. Is that this Friday even? I don't even know now because of all the big market drawdown this week. But that's one where we could take a look at that. And I think that there's really no technical levels to watch. But the thing that I'm probably going to be looking at, aside from just SPY in general over the coming days, would be IBB. With the biotechs having a 20% drawdown over the last week, I think that's huge. And I think we might be in for a dead cat bounce on that thing is a 5% up move in a sector. So if anything, I think where the most entertainment of looking at things move really quickly is going to come, I think it's going to be IBB. Up or down? That part I don't know.
And yes, you are correct. It is indeed another non-farm day, so that can only just add to the fun later this week on Friday. Mr. Rock Lobster, we turn our gaze now to the hinterlands of Maine. What's keeping you up at night over there amongst the trees and the lobsters?
No, the whole is look what happened to, a politician says one thing and they, she tanks the market for biotechnology and healthcare down 20% in a week. I think that kind of stemmed from the fighting drug prices problems from Hillary earlier in the week. But overall, I think we're kind of anywhere with stocks. I would not be surprised if we were up or down 10% from here within a week. We're still volatile. And, it almost like they keep peeling back the onion with this China thing. As in, maybe it's not even that they're growing anymore. Like the economy stopped growing, or they're just trying to deal with rationalizing things. And the market is definitely stocks. I guess the simple answer is, in the QE era of the last 3 years, bad news was good news. Oh, China's not doing well, so we're going to keep QE for longer and we're going to rally. And now all that's gone. I mean, for whatever reason, I'm glad the Fed is finally out of all this nonsense, but I think we're going to have some volatile times. You put together France launching a strike on ISIS. You put that together with China, with VW, have the emissions scandal that's having problem with their debt. That's causing ripples in the debt. All this stuff just sort of gets kind of added together, and then you get kind of a little bit of a snowball. So right now, there isn't a lot of good reasons to own equities short term, probably starting to get better valuations here long term, certainly in some areas like commodities, zero. You can buy the whole commodity sector for nothing right now. And the only thing I could remind everybody about is, in 2002, what was the price of the QQQ? Can anybody tell me that in 2002, what was the low tick for QQQ?
31.97.
No, it was like 18.
Wow.
Okay, it's now trading 100. So it's not that things can get very cheap for a while. Just like commodities, and then 3 years from now it'd be like, oh, I can't believe I'm so stupid, I didn't buy any of that. So I think if when there's some turmoil, there's some opportunity, and right now the commodities are definitely the place not to be, which probably means at some point in the future they will be the place to be. So that's the kind of stuff I'm looking at. A lot of it's more long term. Short term, just too wobbly. I mean, if I want to buy straddles when we're trading the VIX is 27, I think we're still up for some more movement ahead. So.
Yeah, you had your chance. You had your chance, according to this morning with Bloomberg. You could have bought it for 2.4%. Now we already had that today, so you missed your chance, sir.
Silly me.
Why aren't you just willy-nilly buying straddles at the beginning of every week? Doesn't that pay off?
Well, not normally.
It's funny how that doesn't work. All right, sir, they'll have to leave it there, unfortunately, for this rock'em sock'em raw and bloody Chinese sucker punch-filled edition of the old option block. But before we go, as always, one last time, let's turn our gaze back to my cohorts, my compatriots, my nemeses here on the old All-Star panel. Starting off with you, Uncle Mike T. What's cooking in the land of RCM?
Well, if anyone is looking for a financial advisor in times of turmoil, I'm happy to oblige. This is kind of the scenario with which the guy that uses options to hedge things gets made fun of most of the time. But this is my time to shine, so to speak. And if anyone's interested in working with me in any way, shape, or form, even if you have a couple $100 to invest per month, I don't have any minimums at this stage, and I probably never will, quite honestly, because I'm the online person with which I am. Feel free to give me a call. 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. I would love to chat with you.
Yeah, if you're going through markets like these and you don't have even a little bit of money with Uncle Mike, probably not a good move on your part. Because, yeah, you want to sleep at night on days like these. You never know when that next sucker punch is going to land. And have Uncle Mike be there to take it for you instead of you. There you go, Uncle Mike, a new slogan for you. Let me take the blows so you don't have to. And now we turn our gaze to the other side of the country, indeed the continent, to the hinterlands of Maine. Mr. Rock Lobster, in that paradise you have up there of lobster and clamming and swimming and all the other things you do up there. Amazing you find time to do anything else. But that said, what are you working on for this week, sir?
We have our boot camp this week starting September 30th. All you want to learn about managing option positions, finding ways to make some money in this market, take some education. That's what we do. So sign up for boot camp. It's a great deal. And normally with all of our classes, if we don't save you that much money on doing something dopey after you take one of our classes, we'll refund your money. So, and we don't get a lot of requests for refunds.
And you have that 98% refund fee, so it makes it hard.
Exactly. Well, 98.5.
98.5. I'm sorry. I rounded down on your behalf. So give them a call. Of course, I'm joking, listeners. Or even better, surf on over to optionpit.com to check it out for yourself. And on behalf of Uncle Mike and Dr. T, and indeed myself, I want to thank all of you out there in the listening audience. Actually, I did that backwards. Rock Lobster and Dr. T, and indeed myself. I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great questions. And we'll get to them on Thursday, and we'll see you then for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.